Good morning, everyone, and thank you so much for joining us for today's GASB 87 webinar, as time is almost up to become compliant with lease accounting standard. My name is Maddie Robbins, and I am our technical producer today. We have a great presentation lined up for you, and we're offering up 1 hour of CPE for this session. Now, before we get started, I do want to go through a quick review. To receive CPE credit, you must answer 3 of the 4 polling questions and be in attendance for the full 50 minutes. If you do have any questions come up during the webinar, type those into the Q&A window down at the bottom of your screen. CPE certificates will be issued via email within 10 days. If after 10 days you have not heard anything, please feel free to reach out to cbhlearning@cbh.com. A recorded version of this webinar will also be available in about a week. It'll be sent via email and also posted to our website. We will be sharing a quick survey at the end of the session just to gather some feedback, which we of course value. With that, I will turn it over to our speakers for today. We have Christian Fuelgraf, Principal for Digital Advisory and Government and Public Sector Industry Leader for Cherry Bekaert, along with Cherry Bekaert Senior Manager with Risk and Accounting Advisory Services, Alex Wiley. We're also pleased to introduce Wesley Williams, Accounting Manager with Lease Query, joining us today. Now, please, Christian, take it away.
Thank you, Maddie, and thanks everybody for attending. It's great to see so many people that are joining us today. It's an important topic and timely as well. As Maddie said, my name is Christian Fuelgraf, and I'm a principal in the lead for our government and public sector practice and industry at Cherry Bekaert. By background, I've been in consulting for about 23 years. And prior to that, I was in government and left state government as a senior executive and director of our Office of Budget and Management in the state of Ohio. It's been interesting. There's a lot of organizations and right now that are raising concerns about becoming compliant or not being compliant with the GASB 87 standards. That are the deadline is pretty approaching pretty quickly. We receive calls pretty regularly, emails asking a variety of questions. So this is a timely session. I hope you find it informative as we're hoping it will be. We're also receiving a lot of questions from organizations that decide to collect the data and build their calculation models on their own in Excel or some other spreadsheet. They want to know how to gauge the accuracy of their calculations. And I think it's a great question. And it's something I know Alex is going to touch on a bit during his presentation about a way we have developed to help clients get through this and answer their questions and give them the comfort that they are accurate and they're doing well, or no, there's some errors in it, and give them a mitigation plan on how to correct it. Prior to the webinar, we received quite a number of questions from people, some panic just asking, or some just asking questions saying they're not compliant, and it's really been for a lot of different reasons. Alex and I just recently had a call with an organization, kind of a medium-sized organization, whose controller was responsible for the compliance, and they had been getting status reports, thought they were all good to go, and found out whenever he departed that they were not. And they realized what some of the implications could be for them with credit, with their bond ratings, and how do we get compliant quickly? We have a limited time, so that's we're finding that there's a number of organizations that are in that situation. During today's sessions, we're going to address some key areas that will answer some of the questions that we've been receiving over the past couple of weeks, things that we've gotten on phone calls. Probably the most important one and probably the most common one is, we aren't ready. How can we do it, or how can you help us to be ready by the deadline? The good news is the answer is yes. While working to become compliant would be handled a bit differently now than it would have been a year ago, it's still possible. And Alex is going to talk quite a bit through that process so you understand how you can become compliant over the next over this short term that we have, or the short time we have left. There's a chat window open for all attendees, and a Q&A tab on the bottom. Please ask questions. Feel free to ask questions you can throughout. We'll address them as we can, or we'll follow up with you and address them over the next week. But right now we'll get through as much as we can during the next hour. So with that, Alex.
Thank you, Tristan. And as Tristan said, thank you everyone for joining. I know this is an important topic, not only for us, but for the clients and individuals on the call. Today's, we have an agenda for today's call. Now, as we were talking through, I think the two key things we really want to get out of this, obviously, is the get through the polling questions for your CP. We all want CP, but also we want this to be a very informative session and talkative session to ensure that we're not only addressing your concerns, but we're showing you how you can really continue, be in compliance, even at this, what I call the middle to late stages of the ball game. And so today's agenda, very briefly, because we're going to go through each topic, and there's a lot of information to get through, is we're going to talk about understanding the potential impact. Obviously, we're here in what I call year 2 of the standard, and there's still some potential impacts that we don't know about as it relates to our balance sheet and operations. We're going to talk about how do you apply the new lease standard. And this is where we really think a good Q&A of questions that we're getting as we're helping clients implement 87. How do you identify embedded leases as it relates to governmental entities? And then last but not least, where I think the sole entire purpose of the webinar is, how do we implement the lease standard at this point in time, today and now? So with that being said, we'll go ahead and get started. We'll start off with our first polling question. First polling question today is, what is your primary purpose for attending today's webinar? Is 1, interesting topic, 2, knowledgeable presenters, 3, CP credits, or 4, required jobs? And while we're waiting for today's polling question to be answered, I thought it'd be a great opportunity to go through and answer today's questions. Do you want to go through maybe the first question, Wes?
Sure. So are we looking from the chat or the one that we were looking at earlier?
Let's go through some of the questions that we may have had received prior to the presentation.
Sure. One that stood out to me, and one that we hear often when customers are also looking at tools, they say there's some of those early policy elections that they're considering, things like incremental borrowing rates. Where do I find my rate? Right. And obviously the standard mentions that the first thing you should look at is the rate implicit in a lease. But in practice, we find that's often not there, right? And so that next one is using that incremental borrowing rate. But sometimes in government too, they say, hey, we don't have debt right now. We don't have a line of credit, or we haven't, refinanced debt. And so this is definitely one of the harder things to identify early on, but an important one. Going to a financial institution and taking your lease and your assets and using that as collateral. You say, hey, with similar terms, with this asset as collateral, what type of rate could I get, right? Those financial institutions can help you identify those rates, so you can start to really, begin creating these amortization tables, begin creating all these calculations that you'll need. But definitely can be a time-consuming effort as well. So we always encourage jump on that as soon as you can if you have not already.
That's a good point, and I'll add to that, Wes.
Yeah.
Obviously, you do have the opportunity to go to your financial advisor, your bankers. And if you don't have those, relationships, or you don't have any public debt, there's a third option. You can go to a CBH valuation firm, or any other kind of actuary valuation firm to help identify and develop those rates for you.
Yeah.
Moving right along here. Looks like, let's look at the results of the poll here. Looks like we got about 35% required for the job. Well, obviously, that's why we want to get through the CPE. Looks like the next leading topic is an interesting topic. And then lastly, is the CP credits. That's a good point. And hopefully we'll get through all the CP credits so everyone can get the requirement for the job. Next. One of two reasons why GASB issued this new standard. The first reason is transparency. More leases we recognize on the balance sheet. Prior to this guidance coming up, if you recall, there was a discrepancy on how most governmental entities recognize the balance sheet and what they put in the actual footnotes as it relates to leases. With this new leasing standard of 87, it's going to bring into consistency across all governmental entities, transparency on the actual operating lease costs, not only on that's in the balance sheet impacting today's financials, but the future financials as well. Also, the reason why the GASB issued this new standard, comparability. They wanted enhanced disclosure by the lessee and lessor. Though there wasn't too much change in a requirement from disclosure requirement on the lessor side, you're going to see now on the lessee side from a governmental standpoint, there is a lot more disclosed information that really brings a lot more useful information to the users of the financial statements. Obviously, the effective date, as we knew, the original effective date started for this particular standard December 15, 2019. Because of certain economic and current situations, that was delayed out to June 15, 2021. I know the question has been asked, is it going to be delayed again? Unfortunately, this standard is live and active, and so there is no more delay. Early adoption is required, is encouraged, but not required. One of the things I want to bring out about the effective date of transitioning as I'm talking to my clients that I think is key is the retroactive application. And so I get a lot of questions from clients, you know, like similar to 842, do we have the option to not restate? Unfortunately, on the GASB 87, you don't have that same election. You're required to restate unless it's impractical to do so. So the question is, what is impractical? That's something that you and your management and those charged with governance will have to sit down and talk about and check with your auditors and understand what that criteria of impractical means. The actual standard itself doesn't apply what impractical means, just tells you that if facts and circumstances are existing that makes it more impractical to restate, you don't have to. But if those standards or those facts and circumstances don't exist, restatement is required. And so what does that really mean when we say restatement is required? Well, when we're presenting comparative year presentations and your year end is December 31st, you're required to report on the GASB 87 for both January 31st through December 31st, 2021. That would be the earliest year presented. If it was a single year presentation, the earliest year presented would be January 1 to December 31st, 2022. Same with June 30th. If you're required to restate, the earliest date is July 1st, 2021 to June 30th, 2021. Whereas if it was a single year presentation, it would be July 1st to 21 to June 30th, 2022. And same so far for September 30th as well. You'll notice the earliest year is 2021 for comparative year, and then 2022 for a single year presentation. Some of the impacts and implications of this new standard, as we know, there's going to be some impacts to your bond and loan covenants, definition of the lease within your debt covenants. There are going to be different financial statement ratios that are going to be impacted. There's going to be some different borrowing capacities. There may be some rating agencies impact. There are definitely going to be rating agencies impacts if we're not able to be in compliance. Implementation timeline and resources. Who should be involved? How quickly can we really and truly get implemented? If we have 15 leases, if we have 50 leases, if we have 500 leases, what is the quickest process to get implemented? And then also from operations standpoint, what are the policies that's going to be impacted? What new accounting leasing policies should we have? Should there be any new controls in place? Should there be segregation of duties, review and supervision? Systems, you know, what should I use a software? You know, what is it practical to use my ERP system? Does my ERP system support a leasing calculation? Should I be going out there and talking about leasing software? And you'll see later on in the webinar, we're going to talk through some of the benefits of using a software. And then the people. Do I have the right people in-house to do this? Do I need to maybe add on to people? Do I need to have an advisory firm to help me with the implementation and maybe with what I call day two accounting? Some of the impacts to covenant compliance. Some of the things you want to do is get an arrangement of all your covenant compliance, inventory all arrangements with compliance and debt covenants. Do I have any loans out there? Do I have any governmental debt? Do I have any bond security ratings out there that are going to be impacted? If so, I need to arrange all those, get a handle of all those particular instruments and see what covenants are impacted. I need to be talking to my bankers to let them know that with the adoption of 7, I'm going to now have this new lease asset on the books. I'm going to have this new lease liability. It's going to impact my debt to equity. It's going to impact my interest ratios. Can I get a waiver for those? You want to analyze the terms in alignment with old versus new GAAP. You definitely want to have those conversations. If you have a third party CPA firm helping you through the implementation, go and talk about that up front early. You want to talk to your bankers, have those conversations to ensure that you're not tripping any debt covenants. And then lastly, you want to conclude, communicate, and confirm with everyone. Some of the impacts for accounting and reporting, obviously education and communication. The biggest thing with this standard is educating yourself on GASB 87, the impact of adopting the new lease standard, communicating with the stakeholders, communicating with the lease, with the new personnel, developing a project team and resource considerations. Who do I need? How many people do I need? Do I have the right resources in-house to implement? And then do I have the right resources? Have I properly considered if I have the right proper software? Do I even need a software? You know, what's the impact to my annual financial statements? You know, what timeline? Obviously, we're really talking about timeline at this point in stage, but you know, with this condensed timeline, what are the factors I need to be considering from a project management standpoint and adoption methods to really get adopted by 6/30, by 9/30, by 12/31? Assess the risk of material misstatement. Is this material to me? You know, even if I went through this whole process and included every single lease that I possibly can have within my organization with my entity, would it even be material to my entire financial statements? Do I have a centralized versus decentralized process of collecting lease contracts and service contracts? You know, should be thinking about inventorying all my lease arrangements, my service contracts. You know, one thing that people don't realize is 87 says leases in the topic, in the title, but it also covers service contracts. You know, how am I evaluating my service contracts? Do I have a centralized process of keeping all my service contracts in one place? Or is it decentralized? I need to go out there and start reaching out to the procurement group, to legal, to IT, to accounting, to come up to inventory all those lease service contract arrangements. And then lastly, the adoption disclosure. There's going to be a new disclosure requirement for my financial statements. Information systems. Obviously, this is going to be key. You know, how do I separate, keep records of my lease versus non-lease components? We'll talk about what that means. Amortization of right of use assets. You know, what type system has a triggering remeasuring criteria? Maintain your financial reporting, internal controls. All this information you'll see is key to why we really truly believe using a software, no matter at what level number of leases you have, you'll find a benefit of. So what do I do now? You know, I know their standard. I know my time is running out to implement. I know I'm up against the wall. I know I may not be in the position where I thought I was at. What is the next step? Alex, how can you help me feel ease of mind that I still can be in compliance by my June 30th audits? Read the standard. You know, if you haven't started reading the standard, attend these webinars, read the standard, identify resources within your group that's going to champion, take control of this process for you. If you don't have anyone within your group that you feel has the time and wherewithal to champion this process, reach out to a CPA firm, reach out to an advisory firm to help lead that process for you. Review your bond covenants. You definitely don't want to ensure that you're in compliance with any debt outstanding debenture issuance that you have. You want to make sure that any bonds, any loans that are impacted by this new standard would not be triggered from a compliance standpoint. Determine the resource bandwidth. Do I have the bandwidth in-house to get this done? If I don't, how can I work and partner with an outside party to help me implement? And then last but not least, educate your audit committee and board and other stakeholders. Polling question number 2. Have you started the process of understanding and adopting this new standard? Yes, I have a good understanding of identified internal resources. Yes, but I have yet to identify resources. No, I don't have a good understanding, or no, I'm still hoping there is another delay. And while we get for those polling questions, Wes, do you mind giving me one of those questions we have, and I'll see if I can address one of them?
Sure. I think a good one could be, is there any impact at the governmental fund level with modified accrual? Should the last year be recorded as a current liability?
That's a good question. Obviously, as we know, that is a good point. So it's going to depend on the actual approach you take. Obviously, as we talked about earlier, a restatement is required. In that standpoint, there is a requirement to change the modified accrual. If you do have the reasons, if you do have facts and circumstances that's going to not impact your current, or that allows you not to do a comparative restatement, just do a single year comparison, and then no, there's no impact to that particular government fund level. How about another question there, Wes?
Yeah.
We still have a little bit of time.
Sure. So how about how do you handle variable lease monthly payments? And that's one we hear about often.
That's a good point. In this particular scenario, you have an option as an accounting firm to elect to what we call combine them as part of your lease calculation, or bifurcate and not combine. In that option, that selection you have to make. Obviously, there are some decisions into that selection. If you decide to combine it as your lease payment, it's going to be part of your actual calculation of your ROE asset and your lease liability. If you decide not to bifurcate and not combine that variable component, i.e. the CAM charges, though they do not impact your lease liability and your leased asset calculation, they're still required to be inputted and captured because it's part of disclosures. One of the things you'll notice with the most software systems, you can actually calculate and capture the information depending on how you decide to elect.
Yeah. I don't know what you've seen on your side, Alex, but I know we've seen most people we talk to choose to, I think, bifurcate that and break those out. It really tends to be easier in practice from our perspective.
That's right. Most triple net leases won't have their information broken out. So most clients decide to combine that. If you do happen to have visibility into that level of leases, it is beneficial to bifurcate, because you obviously can reduce your lease liability and leased asset. Well, let's move into some of the polling results we have. Looks like 61% of the group has a great understanding, has identified internal resources to assist with adopting. So that's good. I'm glad to hear that. Looks like the rest of it, the next one is 22% is yes, but they've yet to identify resources to assist with adopting. It sounds like that 22%, you guys have started to understand the impact, but you yet to pull the trigger on how to put together a timeline and a project plan. And that's something we definitely can help you out with. 13% say, no, I don't have a good understanding. Hopefully after this call or this webinar, that number goes down. And obviously one of the things we're here to do is to really help not only educate everyone, but help everyone remove that 800-pound gorilla out the room, let you know that even though we're at this point in time, we still have the resources to help you implement. And then last but not least, I'm glad only 4%, but there's still 4%. No, I'm hoping there's still another delay. Unfortunately, guys, that there is no more delay right there.
Alex, I was just going to drop in that I talked to somebody at GASB late last week, and this came up. And they're still getting calls, and he said, tell people that there's no more delays. The deadline's coming, and you got to be ready for it.
That's a good point. Well, moving on. Turn it over to Wes here.
Yeah, awesome. So, Alex, appreciate you walking through that. So now let's talk about how do we actually start to apply this in practice, right? And I think the first and the most obvious place to start is how do we define a lease under GASB 87? When you look at the whole standard, this is the largest area that we find where there's the most work is just going through and identifying, finding all your leases. and it can be difficult, right? Because there's some nuances in here. And when we look at the definition here, there's really 3 key points of this I want to call out, right? So you have a contract. I'm sorry, if we get back up real quick. So you have a contract that you see that conveys control, right? So control is a very, very critical piece when we're identifying whether we do have a leased asset or not. You'll see we're going to use another non-financial asset as specified in the contract here. So now we have a contract, right? And we want to talk about what that control looks like within that. So again, the first piece you see up here to the left is that contract, right? We have an exchange or exchange-like transaction. This is a unique piece too, because we see a lot of times in governmental entities, you'll have land that we lease for $1, right? That's not really an exchange or exchange-like transaction. So that's going to be scoped out. So you need to find a situation where you do have that true exchange. It's a non-financial asset, and we have some type of contract there. Now then we consider the control aspect. So do we have the control to use that asset itself, right? You don't have the burden of the ownership, and the asset's not actually being transferred to you, but you have the right to use it. So a question earlier that came up was, what does our RUT asset or right to use asset mean? And as it states, right, you have the control, the ability to use that asset that's in your possession, right? So that first piece that we got to consider is that control. But you'll see here at the bottom, right, if you do have that transfer, so you're actually going to be obtaining that asset after, that's not really a lease anymore. It's really more of a finance purchase or a sale of that underlying asset. So a factor to consider there when we're thinking about, again, whether we have a lease or not. But again, the first thing we're going to identify is the control. The next thing that we'll start to figure out is, well, what's the term here, right? Because we have to identify whether this is a short-term or long-term lease, because that's going to have a different effect on how we handle that too. So understanding the full lease term, there's multiple aspects that can go into that. The first you'll see is this green box here, the non-cancelable period, right? So identifying what period where neither party can cancel that. Then you'll add to that, right, any options to extend that are reasonably certain. Now, this sometimes is a bit of a gray area, right? Because how do I determine if I'm reasonably certain, right? There's no percentage level barrier or anything like that. It's just you have to have some type of justification. We always encourage that that's documented as well, whether it's a policy that we don't take options until they're up and ready to go, or you use historical considerations to again become reasonably certain, whatever it may be. As long as you justify that, right, you can include those in your lease term, again, that those reasonably certain to renew options. You also be aware of termination options, right? If one party can and then the other party can stop it, right, then we're gonna have to take that portion out. And then finally, any period subject to fiscal funding, right? So periods that have that, we're going to include in there. So a lot of factors to consider when we're thinking about that overall lease term. But again, take this as your guiding road here, is to consider all the different aspects there. And then not only consider the aspects, but also consider if you're reasonably certain or not to take those. Now, there are some exceptions to this, right? So we talked about financial assets. Intangible assets are not going to be included in GASB 87. Don't worry, you still get to account for them, because I know everyone's excited about that. So software assets are going to be included next year under a new standard GASB 96. We won't dive into that. I think we got enough stress right here today with 87. But again, those will not fall under this current standard. Also, consider things, biological assets, inventory, right? Those are not going to be considered in the scope of this GASB 87 standard, and won't really be considered a lease, even if they start to align with some of those factors that we looked at earlier, will be scoped out if they fall into those categories. And then again, we talked about leases that transfer ownership, right? And not just transfer ownership through a bargain purchase option, right? If you get it for $1 at the end, that's not really what we're talking about here. But a lease that transfers ownership is no longer a lease and more of a finance purchase. Also, things like supply contracts, service concessions, short-term leases, right? So that's why that consideration that we talked about earlier around identifying the true lease term is so critical, because if your lease turns out to be less than 12 months, it's going to be categorized as a short-term lease, and you won't see that same impact to your balance sheet. So you need to make those considerations very carefully, because it can have serious financial impacts, determining whether it's short-term or long-term, as far as all the different aspects to that lease term. And then you'll see finally just some certain regulated leases as well can fall out of that.
One thing I'll add to that, Wes, is
yeah, go ahead.
question I get a lot of times is that lease that transfer ownership. a lot of times I have a lot of clients who may have a good understanding of 842 and say, well, I've read 842 and I'm just going to apply that to 87. Well, this here is probably one of the key differences between 842 and 87. Under 842, a lease that transfer ownership is within the scope of the leasing standard, whereas under 87, it's outside the scope.
Yeah, very good point. So now we want to walk through some real life situations, right? These are questions that were posed to the board and ones that we hear about often. The first one we'll talk about is capitalization threshold. I think this is something I hear almost every time I talk to a government agency, how to identify my capitalization threshold. And so the question that was posed here is, we adopted a capitalization threshold that we have for expenses and acquisitions. Can the government apply similar threshold recording those liabilities or not? So determining, whether your lease is material or not. I know Kristen looks like in the Q&A posed a similar question, right, around materiality and around being able to capitalize those. And so, you definitely can identify a threshold, right, either individually or in the aggregate, right? It should be recognized. But we start, I think, often with a basis if we can, right? If you do have a capitalization threshold for, say, fixed assets or for, expenses, I think that's a good place to start. Always, I think, don't just use that as your only consideration, right? Because you'll see here at the last sentence of this, right, is if there's still that significance of the lease asset and the liability at an overall portfolio, might still want to consider including that in the standard, but definitely identifying a threshold is important. And I think, again, doing this as early as possible so that you can identify your true portfolio, right? Because if it falls under that threshold, we're going to be able to scope that out.
And if I could add there to you, Wes, a real life example I have a governmental entity that has $1 billion balance sheet.
Yeah. And
unfortunately, all their leases combined doesn't equal $100,000. And so when we're talking through materiality, no matter how much or how they bifurcate or evaluate their lease portfolio, it's just not material. And so what I told them is not only are we looking at material from a quantitative perspective, but from a qualitative perspective, and it really is asking the question is, what is important to the user of the financial statements? If lease information is important and it's not a material number to your total balance sheet, one would say it probably still belongs on the balance sheet.
Yeah, that significance, like you said, just not on the quantitative, but that qualitative significance can definitely be overlooked sometimes. But the next piece here on the implementation guide is the lease asset. So this is an interesting one here because it's talking about payments that are made while a building is constructed. So in this instance, let's say that you leased a building. We'll use some real life scenarios. So we leased a building in January, but they're still finishing up some construction. You don't actually get the keys and aren't able to go into that building until February. Say we got a month here. So, but you still started that lease in January. You started making payments on that lease, and so can those payments be made, account towards that asset? And no, right? Because the key for starting a lease is when you have the right to use that asset, and when the building is being built, you don't have the right to that asset, right? I can't go in, I can't use that asset. So it's not truly a lease yet. It hasn't started. You're just having prepayments. So any of those payments in that first month will go towards a prepaid account, as you're seeing here, right?
Mm-hmm.
But yeah, I think that's definitely a common one we find, and sometimes difficult to understand is, right, what is the true actual start of that lease? Same thing if you have a vehicle, right? Start that lease in January, but the vehicle is being shipped or something like that, right? That lease doesn't really start until you have the true right to use that asset. Awesome. The last one here is, can amortization expense for lease assets be combined with depreciation expense in the required disclosures by function? And the answer is yes, right? In the MD&A analysis, it allows for this, right? If you have to have those amortization expenses to multiple functions, you should charge those to the functions accordingly. And then in turn, right, you can then combine those with that total depreciation expense by each individual function. So I think it's a common question we hear for sure. want to make sure you have a good understanding there. So these are some real life examples. Now, a last piece around implementing this this standard and applying this, once we've identified our normal leases, is those embedded leases. These are really often very tricky, very difficult. And so we have a good walkthrough here to help you identify. And the very first piece of this is there an asset involved? I know one that's come up before are dumpsters. It's a weird situation, right? But if you have a service contract with, a trash removal service, and as part of that service contract, right, they provide a dumpster. Now, you might not be explicitly paying for just the dumpster, but there's an asset involved in that contract. And so once we identify that, yes, we have an asset. The next thing is there explicit identification or implicit identification, right? So if you have that situation, is there a right of substitution, right? So can you substitute out that that dumpster easily, right? Yes, you don't have a lease here, but if you don't have the right to change that, they might. That changes the situation here. Also, right, do you derive all the benefits? Are you the one that's solely using that dumpster, right? And I know this might be a silly example about dumpster, but we've heard it in practice multiple times. So if you start to see yourself falling in these situations, you might have a lease. So take these different ideas, right? The scoping, the control aspect, and that control is a very important part of this standards. If you do have the benefit and the right to use that asset that, again, might be not the key part of that contract, but is included into that service contract, that might be an embedded lease for you.
And one thing I'll add here, just real life examples, especially as it relates to governmental entities, the two that I get all the time, cell towers.
Oh, yeah.
Do they qualify? And then, believe it or not, similar to dumpster, the Iron Mountain dumpsters, the ones that sit inside your office, do they qualify? And more likely than not, those two, when we go down this kind of what I call the decision tree here, more likely than not, do qualify for leases.
Yeah.
All right, well, the next piece is implementing lease standard. Before we get into, we'll start with polling question number 3 here. And let's just go ahead and jump right into the polling question. How do you plan to implement or adopt a new standard? Is first question 1, outsource a third-party CPA firm? Answer 2, co-sourcing, which is outsourcing with a third-party CPA firm as well as using in-house resources. Answer number 3, or option 3, is full in-house implementation, and then number 4 is not sure yet. So while we're waiting there, how about we go to some of the Q&A that we have here? Let's see here. We have one Q&A here. We have a master lease contract. We have heard of conflict information regarding materiality. I think this is what we talked about here. We set our materiality at $5,000. Do we look at each copy in the agreement individually to determine whether it should be included, or would you look at all the assets added together? That's a good question. So when there's a master lease agreement involved, as it relates to materiality, the first question you should be asking yourself is, when we recorded these assets under the master lease agreement, did we record it as one asset so that we combine all the cash flows from the multiple assets under this agreement, or did we individually record each individual asset? And that answer is going to determine how you derive materiality. Obviously, if you combined all the cash flows as one asset, then yes, you're going to evaluate that particular master lease agreement as one asset. But again, if the answer is we bifurcated each individual asset under the master lease agreement as its own leased asset and leased liability, then each of those leased asset records should be evaluated from a materiality standpoint.
Yeah.
Alex, if I could jump in real quick with that, that was one of the early clarifications that GASB made around. It was, I think, one of the examples that's come up on every engagement I've been is around copiers and using a master agreement to do it. And I think each situation is probably a little different. And the answer is it depends. But it's a good thing to follow up with if somebody has a question. I think that's a good one to follow up with. And then on materiality, I know we talked a little bit about it earlier, and there's the very some of the issues that Alex and Wes talked about on your balance sheet. But I also think, and I look at it from a policy position too, and I've always advised clients this way, is there's a political answer to that as well. Small p, not partisan, but it's, you know, you're in government, right? So the answer in government is going to be very different than if you're in a corporation where you're answering to shareholders, you're answering to the public. So what's material to your citizens, to your stakeholders that are out there, to the legislative bodies that are going to be answering questions? And is that going to be an impact to them? I had one organization that wanted to set a really, really high materiality threshold and really kind of try to skirt around GASB 87. And he said that's just not going to work. And their auditors agreed with that as well. And they went down to a pretty reasonable number, but some of the stakeholders, some of the executives and the legislative people started going in and saying, well, what if I lost this money? You know, and that's how they were looking at it. What's going to be material in that sense? So I think it's something to keep in mind as you're doing it. Kind of late in the game to be doing, but it is something that's still important. So I wanted to throw that in. And on the answers to the polling questions, one of the questions that we've received a few times recently that I think is probably relevant here, Alex and Wes, is, you know, how are you going to do it? And one of the questions we've been getting is you know, how do software firms and CPA firms work together to make this happen, especially given the timing? So maybe that's something you guys can address.
Yeah.
Yeah, no, I'll start and let Wes jump in. And again, I think the key here is to really answer the questions to the public here. And so, you know, we partner with several software clients, including Lease Query. The way we work together, obviously, you know, we're in there upfront building an implementation plan together. You know, we're working with not only the client, but we're working with the software provider to make sure that implementation plan is consistent with the client's thoughts. You know, especially we're at this point in day and age now, at this time point and where we're at in the calendar, you know, we're conducing or reducing our implementation plans. Whereas, you know, they previously were a 60 to 90 day plan. We've done this enough from a repetition standpoint and understand the standard to the point where we're now getting that plan down to a 15 to 30 day plan, depending on the number of leases. And so, you know, we're going to work hand in hand. We're going to be involved in those upfront meetings. We're going to be involved in the planning meetings. You know, we're going to lead the practical expedient elections. We're going to help not only train you on the software as a lease software provider, while you're doing your training in the background with the software provider. You know, we're going to be setting up your database. And so we're going to be running multiple work streams so that we're ensuring that we're reducing down the implementation plan, but also working together to the same goal.
Yeah. Yeah. I think that's, you hit on a couple key points there. Really is, you know, there's so many invaluable things about identifying those policy elections, right? We've talked about a lot of them here, right? Capitalization thresholds, you know, talked about incremental borrowing rates. Those things have taken so many organizations so long to identify. And so having, you know, a great partner like Cherry Bekaert can help in that, right? Can help do reconciliations, right? Once you find a tool that you want to get into, find that software, you're still going to have to do reconciliations, right? Between your data and that, just to ensure that have all that accurate information. You know, that's where, again, that CPA firm and Cherry Bekaert can jump in and help you out. And then a software can take it from there, right? Create your amortizations automatically, give you all your, you know, your journal entries and those disclosures, right? Those tricky disclosures that we've talked about. And so I think it's the perfect mix from, you know, starting with nothing and then having everything, right? Is everywhere in between you're covered through implementation all the way to reporting and the audit even in the future, right? So.
Oh, no, that's a good point. Thank you, Wes. So we'll briefly go through the polling results. I want to make sure we get through everything, but looks like about 58% of the group says full in-house implementation. And one thing I would say to that, guys, is one of the new services that Christy and I are thinking about offering, developing out, is helping a client who's doing a full in-house implementation. Those who've taken everything from the day one establishment to the amortization schedules to the annual disclosures and doing it themselves. And now before I get to my audit team, how do I ensure I have a complete and accurate calculation? And we have a new kind of what I call a new service offering called back testing, is where we'll take your data, take the information that you've inputted as well as input into our own softwares and calculations, and compare them against compare the results against your results to ensure that what you're coming up with from a full in-house implementation is complete and accurate and meets the standards of 87. Because what we don't want to do, and we all know this going through an audit, we don't want to get to an audit where we think we got it right. We used all full in-house implementation and we think we got it right, and our auditors come in and tell us, nope, redo, or we're missing something. And so we've really found this back testing approach, for those clients who decided not to use a CPA firm or decided not to use a software. This back testing approach gives you the ability to use that particular tool without going through the process. And then lastly, looks like the remaining percentage, about 10% is not sure yet. For that 10%, by all means, please reach out to us after the call. We can talk through that. And then lastly, 27% is co-sourcing, with the last 5% outsourced completely to a CPA firm. All right, with the last 20 minutes we'll get through here is how do we adopt the GASB 87 standard? And one of the things I may briefly go through this so we can get through all of our slides. But the one thing I want to point out here is that this approach here, again, because of repetition, because of the many times we've done this for both large and small governmental entities, we now have ability to condense this process into a very condensed time frame so that those who need to be in compliance by June 30th audit, by 9/30 audit, by 12/31 audit, can still be ensured that they can be in compliance. Obviously, some of the key points, and we'll hit on some of these, the preliminary planning meeting. We want to identify all the key resources. We want to talk about the lease inventory. We want to talk about action items. We want to talk about software capability. Again, should we be using software? When is the appropriate time to use the software? The go live call, what's included in that? And then lastly, the final implementation plan. As part of the implementation plan, some of the things we talked about, how do we partner with the software company? We're going to do a deep dive and review of your complex leases. We're going to talk about the policies and the estimates that need to be made to set up a software that you have to make as an accounting election. We're going to review the inputs into a software. And ultimately, the deliverables from all this will be an actual gap implementation memo, a memo documenting the conclusions made and decisions made, the estimated impacts to JE financial statements and disclosures. And then lastly, all this is going to be communicated to your stakeholders. Again, some of the key items to talk about that you should be thinking about when you're talking through your planning meetings. What's my level of familiarity with the standard? What type software should I be using? What is the cost of software? What are the number of leases I have in my portfolio? Am I on the lessee or lessor side? Do I have any subleases? Discount rate. I want to stress discount rate. Under the 87 standard, you're not allowed to use what we call a risk-free rate. So it's either your incremental borrowing rates. That's the only requirement you have. If you don't have access to the rate, having that conversation up front with your CPA firm, with someone to talk, how do I determine that rate if I don't have that rate? Debt covenants, and then related party leases. Actions before you go live. You need to make sure you inventory all your leases. Do I have a complete population of all my leases? Have I reviewed my service contracts for embedded lease and replacement rights? Have I started to capture the data? Do I have a spreadsheet, or do I have a database that's starting to capture all the key components of the data? Lease term, rent, renewal options, purchase options, contingent rent per lease. And then which lease software product do I choose? Here's some of the approaches that we can help you with, that we actually use to help our clients. The first is what we call the basic implementation approach. This is a self-service implementation approach using a pre-configured database. And I think this is where a lot of our clients are doing full in-house. I have a small number portfolio. I have 5 to 10 leases, maybe 10 to 15 leases. All I'm focused on is the counting of it. I'm not concerned about any extra reporting. All I need is my day one accounting, my day two accounting, and my annual disclosures. I may need little help from an outside provider, maybe just to bounce questions off of, or in that project management role. And so you're going to take you're in-house, you're taking the full brunt of the actual implementation. The next one is what we call the full implementation. This is more tailored based on the client is based on the actual leasing portfolio size. This is usually for higher volume leases, more complex lease spend. This is more robust, the lease accounting administration. So this is where our clients who have 50 to 100 plus leases where, they're going to use an outside CPA firm to help them do the full implementation. We're going to work with a lease query or a software provider to help with the robust lease accounting administration side of it. And then lastly, what we call day 2, the lease accounting services. How do I simplify ongoing lease accounting? A lot of questions are starting to come up now for clients. I'm starting to implement, I've done a couple months of recording. What about that day 2 recording? How do I record that day 2 amortization? Do I still need to use a software? Believe it or not, I get that question. Do I need to call my CPA firm to help me record that entry? So the good thing about it is we are very nimble based on your size of your portfolio. We can help with the basic to a full implementation to even at a project management standpoint. Some of the experiences we have assisting with clients, software and scoping. We help clients determine what type of software is best for them. Help clients determine the completeness of their inventory listing. I have a client where we're only doing the search for embedded leases. They have over 200 plus service contracts. And the whole entire project is us going through every single contract to evaluate for embedded leases. Detailed review of the leases. What type of leases meet fall into the scope, fall into the standard of 87. As Wes talked about earlier, there's certain leases that are outside of scope. So we're going through evaluating the lease contract, reading the lease contract, determine if it's a regulated lease, if it's a type A, type B, or type C lease. GASB 87 transition. As part of this process, we're going to develop a memo for you that's going to document how we've adopted the standard, the technical aspects, as well as the implementation. You'll find this is going to be key to your audit team. We can help you with the lease inputs. What are the key terms that need to be input into a software? Is it discount rate, payment streams, renewal options? We can go through a lease security deposits, termination dates. We can go through a lease and evaluate it and come up with that information for you. And then lastly, help you prepare the qualitative disclosures. And then last but not least is we can help develop out and expand out your process controls around leases. Who should be the proper person reviewing? Who should be the proper person approving? Who should be the proper individual inputting the leak information to the software? What should happen once it goes into the software? Now, the next question, what do I do now? What's next? We definitely engage your facilities, procurement, IT, finance staff, any individual within your organization who's dealing with these service contracts. We want to make sure not only are we evaluating your contracts and arrangements that say the word lease on them, we want to make sure we have a complete population of your service contracts. We'll identify the right of use asset arrangements and inventory of those arrangements. So again, the next thing to do is really get our hands and inventory of all the leases that are impacted. Not only lease arrangements, but service contracts that may have potential embedded leases. You want to analyze those arrangements and ask for accounting changes in documents. And then obviously the last is adopt, develop, and disclosure. Polling question number 4. Have you chosen a lease software yet? No, I haven't, but I plan to use one. Not yet, but planning to, currently evaluating options, or yes. And while those questions are, while we're waiting for the results of the polling questions, how about we just bring up some of these Q&As here?
Yeah, I got a good one here, Alex. This is one we hear about a lot. So Vicky mentioned, we have a 10-year lease that is in its last year with an end date of June 30th, 2022. All other aspects of the lease make it applicable to GASB 87 reporting. Is it still categorized as a lease under 87 or is it short term? And that's a question we hear often, right? And you have to consider the full lease term, right? It's as of commencement, not as of your transition date, right? As far as to determine whether it's short term or long term. Once you do identify that, then you'll just take the portion that is from your commencement date or your transition date, excuse me, to the end of that term. So even if it's 2 months into that your transition year, right? Those 2 months are going to have to be amortized and have to be accounted for. It's not a short-term lease because it's 2 months in. It's a long-term lease because you have a 10-year lease, but only 2 months of that in this instance, right, would be categorized under 87 and have to be put onto the balance sheet. But yeah, so you're not out of the woods there yet. There's still a little bit that you have to consider there. So I know it's a common question we hear for sure.
And I did want to answer one of Lisa Blackford's questions from her last about the embedded leases. We have a gas cylinder they consider embedded lease when the service for gas and the rental payments for the cylinders. This is a good question because in this particular case, I have both service as well as an underlying asset. In this case, the service for the gas is not considered a lease, but that rental payments for the cylinder would be considered a lease because it's a physical asset. B, I have direct use and control of that asset. And so because of that, the payments strictly related to the cylinder will be considered an embedded lease. All right, let's go to our questions here. And looks like 48% of the population of the group said yes, or it's glad to hear. Next to 31% no and planning to use one. So I think the next couple slides are going to be beneficial for that group. And then lastly, currently evaluating options at 16%, and then the 5% not yet, but planning to. And I want to talk to the 5% really quickly. And I hope after we, this call, this webinar, as well as these last couple slides, that 5% can really get the benefit of using a software. All right, Wes, we'll turn over the last piece to you here, sir.
Awesome. So, all this talk of getting your portfolio ready, identifying all your leases, identifying those policy elections. I think then the next question is, well, what can you do next, right? What's the options to help get us in there? Alex talked about a couple options too, but also there's the software route. Hopefully it's with LeaseQuery, but either way, just identifying whether you need a software or not, right? Think about, your daily process, right? ERP integration. Is that something that's going to be critical for you? Is it going to be beneficial, right? Mitigate some risk there of journal entries not being pushed appropriately. Do you need lessee and lessor counting? Alex brought a good one up that we see all the time is cell towers, right? Often a really common lessor lease that people might not consider. And there's that, that large change to lessor counting too. So, you might need a software that has able to handle both, right? One that can help, right? Also to consider that day two, right? Again, Alex brought that up. A really critical piece that a lot of people don't think about is, what about that day two accounting? What happens after I set up my amortization schedules? Once I'm ready to go, well, what happens if you have a change to one of them, right? What if you have a modification? How do you handle that? So having a vendor, that can support that software, but also give you that support of the technical, along with, hopefully that partner that you're set up with. So these are some important factors to consider when you're starting to evaluate, do I need a software or not? And if so, what are going to be some key factors in that software that I'll need to look for? But then I guess the question is then, when do you ditch the DIY, right? Excel is great. It's a powerful tool, but there's limitations, right? You can't provide guidance. You can't have that guardrails in the Excel, right? Maybe you look for that software that can have the standard already in there, right? Where the software can be your expert in the standard, right? You don't have to have that. Something like helping you, determine short-term evaluation, helping you determine whether it's an operating or capital lease prior to transition, so you can make that appropriate transition, right? The idea there is to have that guidance in a tool so that you can have those guardrails up. That's where you can start to see the benefit of a software, collaborative database. I think the number one word we hear when we're talking to governmental entities is decentralization, right? Everything is decentralized, right? Well, a software can help centralize that, help collaborate, help communication across the organizations. But then also too, Christian brought it up. So, we thought we were comfortable, but the one person that was handling that Excel sheet left the company. What do we do now, right? Well, you can mitigate that by, again, having a software in place so that employee turnover doesn't matter, right? The morbid idea, if someone gets hit by a bus, right? What are you going to do then? again, that software can be that stopgate so that you don't have to worry about that risk there. And then just the time and effort, right? I think across the board, governmental, public, private companies, everyone is now understanding the fact that we thought this was going to not be that much work, and now it is a lot of work, a lot of time, a lot of effort, across the organization. Again, that's where software can step in and automate those processes, automate journal entries, automate disclosures, automate amortization schedules, so that you don't have to go through that, right? So time and effort is a big one there. Control environment. This is so critical, right? We talked about this a little bit with Excel, but you can't have separation of duties, right? Someone could add a lease in there or make a change. Maybe you don't pull down the formula all the way down, right? Those little things. You delete something out and didn't know because multiple people are in that Excel sheet, right? Having that actual separation of duties where you have to have approval. These leases, as we've talked about today, can have serious financial impacts. So you want to make sure that we're having, a good set of controls there. And then again, just different levels of access and rights here. So look for that, when you're looking for that software plus service, look for technologies built for these standards, right? It's this complex. We want to make sure we can handle it. Make sure you get the automation of amortization schedules, journal entries, disclosures, maybe even key date reminders, right? Automated comparative period restatements. We talked about the restatement portion can be ease, right? And really, we just want to be able to find that comfort and ease, something that's easy use, gives us the comfort around the standard. I think is where you'll really find the largest benefit of the software here.
So Wesley, Christian, Alex, thank you again so much. Everyone else, thank you for joining us. We will follow up with you regarding any of those questions that came in that we did not have time to address today. Of course, if you have any additional questions regarding today's topic or any other topic, feel free to reach out to Alex, Christian. Their contact information is listed in front of you. And one last thing, we do value your feedback and ask that you take part in a quick survey. That link was shared inside of the chat, and it will also be sent to you shortly after the presentation. Again, thank you so much, and we hope you have a great rest of your day.
Thank you, everyone.
Thank you.